Hello, and welcome back. I hope you're having an awesome weekend. In this video, we're going to explain how to read a 10K report and specifically how to deduce the income statement from the 10K report. I'm going to be making a series in which I'm going to be talking about the balance sheet and the cash flow statement as well. But in this one, we're going to focus on the income statement, and I'm going to explain how to read the 10K form in order to get all these values and actually correlate it to the values that you can get from our exclusive tool here, the tool that I'm using for analyzing stocks in my channel. And you can get access to this tool by becoming a patron. By the way, you can find the links in the description box below this video if you are interested. Now, if we go back here, you will see that Apple has actually reported that Form 10K for that is 2021 is the year over here, and we're gonna go through that. This is a report that the company generates and has to report every year, the 10K report. It's an annual report, as you'll see here, for the fiscal year ended 2021 pretty much. Now, the company has to report that because it is a public company, and public companies need to report their financial data to stockholders, shareholders, that is you and me, if we own the company. Because it's a public company, the data has to be public as well. And the Securities and Exchange Commission is actually making sure that this happens and that all this information here adheres to the standards that they have set. So, we're going to start off by taking a look at this report basically and breaking it down, and I'm going to try to explain exactly what we're looking at, and I will also correlate it to the tool as well, as I have examined, as I have mentioned before. So let's start off by taking a look at this actual PowerPoint that I have created, and if you are watching this video and if you get some value out of it, please leave a like. That really helps. This one took quite some time to make, just a few hours really, because I had to create all the PowerPoint and actually denote everything and all that. So yeah, if you want to kinda encourage me for the effort, please just leave a like and remember to subscribe as well. And thank you. Okay, so that's the first page that you see here in the 10K report, is the one that we examined earlier, and you will see that it starts with a par value, or as it's called, like a face value. So you typically know, if you're aware of bonds, that bonds have a face value, but stocks can have a face value too. And typically it needs to be set to a low value in order to comply with state rules. It's almost like a legal thing. And practically speaking, it's not really used for many things, but it means that nobody can actually buy shares at a lower price than this one. And as you'll see, it's a massively low price, which nobody has gotten their hands on, actually, more than likely. So yeah, it just has to be here for the most part for legal reasons, and also there is sort of like a breakdown of the short-term loans or promissory notes that need to be paid back from Apple in this case. So the next page is where the real meat starts, and over here I will try to explain exactly what is going on. First of all, it's important to realize that these values here typically tend to be in millions. Sometimes they are in thousands. It depends on the report, and it's always denoted in multiple places in the report. Whether these values are in billions, in thousands, in millions, or whatever. So these ones are actually in millions, and so as you can understand, this is 365,000 million, which means that they are 365, almost 366 if you round it up, billion dollars. Okay, so this is 2021, 2020, 2019. So the company actually compares the last 3 years, and you will see that there has been an increase in the actual net sales that the company has achieved pretty much in every category from 2020 over here, 39%, 23%, and so on, and a total of 33% overall, as you'll see here, and which is an increase of the net sales that the company had. But what are net sales? And are they the same as revenue? Well, not really. So net sales is what the company sells basically, minus returns, allowances, and discounts. Now, this value is these values are basically added back to the gross sales. So gross sales include this kind of returns, allowances, and discounts. So for example, picture the situation where somebody returns a damaged product to us, like an iMac, for example. This kind of return doesn't affect gross sales because it was part of our selling, and it's still considered part of our selling. But it is deducted from net sales because net sales deduct these kinds of allowances or returns, for example, in this case. Thus, net sales tend to be a more accurate figure really, and the one that we want to be looking at instead of gross sales. And gross sales may sound like total sales, like revenue, but should not really be confused with revenue, because revenue is about everything that the company makes. And in regards to everything that the company makes, that could be money from things that are not really operations based. So, for example, the company could sell something, or the company could be making some money from other operations that are not part of the core business. And so revenue is a more inclusive figure, and gross sales is sort of like a subset of that whole thing, the revenue. That's how it works. Very, very important thing to realize here. It's much, much more important to take a look at net sales than gross sales. And so if you are a manager and you are actually hearing somebody telling you that the company is actually achieving, let's say, 20% more gross sales this year, what you should really be asking yourselves is, how are they doing that? Are they offering too many rebates maybe? Are they offering too many discounts? And this is why they are selling more? Very, very important. And this is why I keep on telling you in my videos that although revenue growth is an important thing and it measures how much you can sell, you need to be asking yourselves, how much am I making out of these sales? Because I can sell a lot of stuff if I'm selling at an 80% discount, but am I actually making money out of these things? And this is where net sales come in. And this is actually the confident way of reporting things here. I wanted to make sure that you understand this very, very important thing, because again, revenue is important, but what is more important is net income. Okay, so let's move on and actually try to correlate this figure here, 365, almost $366 billion. Let's go back to our tool. You will see fiscal year 2021, $365.8 billion is what is reported here, which is the exact figure that you are seeing here. It's a little bit rounded, of course, because you want to be seeing it sort of like in a better manner. You don't want to be seeing all the decimals here, but all the calculations in this tool are actually using the exact figures. This is just for your viewing pleasure here. Okay, so let's go back and move on to the next slide. Now, there is a breakdown that this report has in terms of the different segments in which Apple is selling at. This could be potentially continents or countries. As you'll see here, there's like Europe, Japan, and you will see that the company has also been increasing their sales, their net sales, that is, remember, by 23%, 30%, 70% in all those different segments that they are selling. So they are doing pretty great. Okay, moving on. A very, very important part of the income statement here, the gross margin. Now, where is that? Now, when we're talking about net sales, in order to achieve sales of something, we need to be spending some money in order to make that thing. And this money is called the cost of goods, or cost of sales, you could also find it at. And this report kind of tells us how much the company spent in cost of goods and how much they made in relation to that spending. So, what does that mean? Let's take a look at this example here. It tells us that the gross margin of services is $47, remember, billion, because these values are in millions. So, remember that our service net sales were 68 billion. If you don't remember, let me go back. Our services net sales are 68.4 billion here, right? Okay, so let's go back. 68.4 billion. And our gross sales were 47 billion, as you'll see here from services. So what does that mean? We actually sold 68 billion, but we grossed out of this $47.7 billion because we had some cost for the goods. So out of this 68 billion, we sold 47 billion. I'm just using the about values here. So what is our margins? How much of our 68 billion we actually made in actual money and not cost of goods? If we do the division here, you will see that we made 68, and remember again that our gross sales were 47.7. And so if we do the division, we are finding that our gross margin over here is about 70%, which means that the extra 30.3% was cost of goods, because again, gross margin is equals net sales minus cost of goods. So this kind of breaks down the different things that the company is selling in terms of services and products and what their margins are. And so you will see that the services margin is what we calculated here, 69.7%, and you can do the same thing for the products, which is 35.3%, and the total gross margin percentage of 41.8%. Very nice. And again, you can find these margins, of course, in this tool. You will see here gross profit 152.8, and if you go back, you will see 152.8, the total gross margin, which is basically the same thing. Okay, so the next section here is the operating expenses. So what are these? Operating expenses are typically denoted as the expenses that are made in order to run the daily operations of a business. Basically, what are the daily costs that we need to run our business? This is a lot of things. This could be sales, like marketing, as you see here. I'm having some examples. Interest payments, rent, salaries, repairs, office supplies, advertising, all the things that we need in order to run the daily operations of a business. So, very low operating expenses. Sometimes you can hear a company trying to have much lower operating expenses, so they cut down on costs. But that may not be a great thing, because remember that by having some operating expenses, it means that you are actually trying to sell things. And so, for example, as you can understand, advertising is a big part of operating expenses of a company. If you cut down on advertising, then that could lead to lower sales. Or if you cut down on salaries, if you cut down on repairs or office supplies, your employees could feel worse, and so that could lead to lower productivity. So less salaries, lower productivity, less advertising, lower customer awareness, thus lower sales. You have to be very careful about not thinking that cutting down on operating expenses is going to necessarily provide more actual bottom line, more net income for the company. Okay, so this is a breakdown again of the change that has happened in terms of the costs for the company. And you will see that this has gone up. This is again not a bad thing. Probably more than likely is actually a good thing, as long as the company is of course profitable. And also you will see what is the percentage of this research and development cost in regards to the total net sales of the company. And this is like 6%. Okay, let's move on. The next slide actually tells you what are some other net income expenses for the company, in income and expenses of the company. And this specific one, it talks about the interest and dividend received from marketable securities. Like, for example, the company could be owning some securities that are paying dividends, for instance, or some bonds, for example. Or they could actually have actually sold bonds, and so they have to pay interest. And so these expenses are actually denoted here. And also the tax that the company is paying every year with effective tax rates is also what is added here. Okay, now this is a little bit more complicated here, or it looks like, but we're gonna break it down exactly and tell you what it is here. Now this is the sort of like the final one, which derives to the net income, which is basically the profit that the company generates. Okay, so what is this? You will see here we're having the same things that we saw earlier. So earlier we saw a breakdown of the net sales, and now we have this figure here. We have the cost of sales, remember, where we saw earlier again the gross margin, the thing that we examined again before, the operating expenses, which is actually the research and development, selling, general and administrative expenses, which breaks down to total operating expenses. And if you go back to our tool here, you will see all these values actually denoted here as well. Like, take a look at the total operating expenses, 43.89 billion. Let's go back to our PowerPoint. Total operating expenses, 43.9 billion again, 43.89. This is again humanly readable, pretty much. Okay, and also the tool actually has some extras here that you won't be finding to the form over here, because they are sort of like additions and things of that sort to help you deduce what is happening with the company. So for instance, this one has the total operating costs and expenses, which is what? The total operating expenses plus the expenses for the cost of revenue. So 213 plus this value gives us our total operating costs and expenses. This is an auxiliary one that can actually help you see what is going on with the company. Okay, so let's go back to what we're seeing here. So take a look at the operating income over here. The income from operations, again, a breakdown of what we have already examined, right? Net sales minus cost of goods equals gross margin. We then extract the rest of operating expenses, because remember, the company also has other expenses like research and development here, or selling and administrative expenses. We extract those as well from what we already had, and now we're getting our operating income, 108.949 billion over here. So let's go back to our tool. Operating income, 108.9 billion, exactly what you're seeing in the form. Okay, cool. Now, after we're extracting these expenses, the company has other expenses too. What kind of expenses? The company has to pay tax, for example, right? So provision for income taxes here, as you will see. or some, for instance, it could be some interest that the company has to be paying. And so once we exclude these expenses, we derive to the final net income, which is all the profit that the company generates after all the expenses have been paid, which is also called the bottom line. You may have heard it of or as. Net income is the profit the company made after all expenses have been paid, including taxes and interest payments, also called the bottom line, with top line being the revenue, the sales that the company generated. And remember the distinction between net sales and gross sales we discussed earlier. Okay, so the net income of the company, 94.6 billion here. Let's go back to our tool for 2021. Again, that is 94.68 billion. Exactly what the form is telling you here. Okay, now the reports also generate an earnings per share, a basic earnings per share and a diluted earnings per share, because it helps shareholders understand how much of their money are getting back in the form of payment per share, pretty much, from the earnings that the company generates. And so the earnings per share is basically just a measure of the company's earnings per unit of stock. Is earnings per share divided by the outstanding shares count, pretty much. So Apple has, in this situation, as in this report really, 16.8 billion outstanding shares, and this is also mentioned in the report, in this report actually. And the net income is 94.68 billion, that's billion here, 94.68 billion. So what we want to be doing here is we want to discover how much of this income is actually allocated to each unit of shares, to each unit of outstanding stock. And so what we're going to do is actually divide this value to the amount of outstanding shares in millions, of course. So when we do the division, we're getting that the diluted EPS is 5.61, and this is exactly what we're seeing here. Now, diluted EPS tends to be lower than the plain EPS, and this is the diluted outstanding shares. This report will also have the non-diluted amount as well. It's denoted in a specific section. You can find it in the full report. And this is actually, the diluted EPS actually deducts some of the preferred dividends, for example, because they are not available money for common shareholders. And so the diluted EPS is a little bit more accurate because it extracts those. And so this value here that we have in our tool is the earnings per share, but you can also take a look at the diluted EPS if you really want to. In fact, I'm actually potentially even thinking of adding this here or as a separate section, but I didn't want to make it too complex for people, because it can be a little bit too much to have two values really over here. I may add it in the future compared to what people think about it. Okay. Typically, you take a look at people and actually websites, for the most part, talking about the plain EPS, but it's good to have both. All right, so moving on. Also, remember that diluted EPS, whoops, I pressed, went to the last one. Diluted EPS also includes warrants and issued options, and this is why the diluted EPS count, you can actually see the counts here. Okay, this is the count that we're using. It's actually part of this here. You can actually see it here. The diluted count is 16.8 billion, while the basic count is 16.7, because this one includes warrants and options that can be potentially exercised at some point, and so they have to be included here. This is why the diluted one is actually a little bit lower. And this actually breaks it down, and this is exactly what you're seeing in this report here as well. Now, this one, as I mentioned earlier, has extra stuff. For instance, companies are not by law, do not by law really need to report their EBITDA. And so this company, for example, Apple, doesn't actually report their EBITDA in their 10K report, and they are not required by law. Now, some companies will include it because it looks better, is the thing. Because what is EBITDA? EBITDA is earnings before, let's break it down. EBITDA, earnings before interest, taxes, depreciation, and amortization. It's an abbreviation. So let's go back to our tool here, EBITDA. I'm actually including that here, EBITDA. Earnings before interest, taxes, depreciation, amortization is what it means. And how do we get to that? We get to that by going back to the net income, which is the earnings. That is the earnings, net income. And then we add back all these expenses, like an income tax expense. Now, if we add the income tax expense, we're getting earnings before taxes. And so this value plus this value gives us this value here. And so as we're adding it back, we're getting to EBITDA because we're adding more expenses, depreciation, amortization, the DA of EBITDA and the I of EBITDA. So we added DA and I here. So as you can understand, this was EBT because we haven't added DA and I. That's how it works. And this actually kind of helps to show you what the company generates before all these expenses are paid. And it's mostly used by companies that are not net income positive because it looks better. Because imagine if you're looking at a company that's losing money every year, they're having a negative net income every year, it looks bad. And so in order to make it better, they are actually taking a look at EBITDA, which is earnings before all these expenses. Take a look at Netflix. For example, Netflix has an insane amount of amortization. What is amortization? Is depreciation for films, for these productions that they are making. And so if you take a look at EBITDA, it's going to be much, much higher than net income because it's a massive cost for them. And so it looks better in their report. I haven't even looked at the report in terms of their 10K. I'm pretty sure they're including EBITDA without ever having seen that report. I'm going to take the bet and say that EBITDA is going to be part of the report because it's going to look better, so they will probably include it there. Again, I swear to God, I haven't looked at their 10K report, the one that they have submitted. I have looked at the values that I'm getting from the tool, but I haven't looked at the report. But I bet money EBITDA is going to be there. And companies that are, generally speaking, net income negative are going to be including EBITDA more than likely, almost always. So this is how this breaks down. This is what the net income statement is. And again, remember, this is the 10K report. This includes a lot more information. We're going to talk about the balance sheet next. This is going to be the next video. But for this one, I wanted to keep it to the income statement and talk about how to read the income statement by taking a look at the Form 10K and then how this correlates to our tool here, how the tool actually derives all this information automatically from the 10K form and my third-party provider who is actually doing all the work for me. So I hope you enjoyed the video. I hope it helped you understand. I tried to make it as detailed as possible. Please let me know if you liked it. Please leave a like if you did. And if you have any questions that you'd like to ask me, please leave a comment below. Of course, remember that this is the annual report that we examine. There's also the quarterly reports that are typically in 10K, but 10Q. But this is the same idea, and you can read them in a similar manner. And hopefully, again, this video was useful to you. Please let me know again, and please leave a like, because this took hours to make. And more videos are coming, with the next one being the balance sheet. Thanks again for watching this one. I hope you enjoyed. If you found this video useful, please remember to share with people who would find it useful as well, like friends and family. Again, took a lot of time to make, and I really think it will help people understand exactly how to read an income statement and what all this jargon means. Thanks again for watching, guys, and I'll see you in the very next one. Bye-bye.